What's going on, guys? It's Dave with LoFiTrader. Let's pay attention to this video because with Jerome Powell coming out and giving us a stay in the Fed rate interest hike of 5.5%, money got dumped into the overall market. In this video, we will go over the SPY, the S&P 500, the QQQ, the tech-heavy ETF, the IWM, the small and mid caps, and we'll take a look at a few other like your semiconductors. We'll go over the key reasons why we need to be careful here at these all-time highs. I do believe
a pullback is imminent.
We do our absolute best to bring you the best in stock news and entertainment. We pull together the data, we do the stock technical analysis, and our editorial team does an amazing job putting these together. So if you could hit a like and a subscribe, that would do us wonders for the YouTube algorithm. Let's take a look at the S&P 500. Old Papa Powell came out on Wednesday and let us know 5.5% was going to be the benchmark still in the Fed rate hikes. Next, he also said 3 interest rate cuts by the end of the year. This fueled the market with a ton of cash. Reaching up on Thursday, the S&P 500 grabbed a price of 524, a new all-time high. Now pulling back to 521.21, I expect we have a continued pullback, a gradual pullback, or at least trade sideways and wait for the moving averages to catch up. The QQQs had an amazing debut on Thursday, reaching up and grabbing that 449.34. You'll love to see it. It's the tech heavy. It's your big stocks. It's what our technology that we know and love today. Now pulling back, but having an amazing buying power at the end of the day on Friday to show you just how strong this really is. Now, I do believe we still need to pull back or at least trade sideways and let those moving averages catch up. So let's sit back, relax, and see what the Qs have in store for us. The IWM, or the Russell 2000, had a beautiful move, but not ever reaching new all-time highs for this year, nor ever. So we know that the IWM, the Russell 2000, is a lagger in this market. Just like if you look previously, it was a lagger when we started to fail. It was the last one to fail. Will it be the last one to reach all new highs before we head back down? Only time will tell, but currently we're trading at 205.07 and we are trying to find support again on the 30-day moving average. Unless it can find some sustaining buyer power in these small and mid-cap stocks, we might still be in for a rough and bumpy ride. The SMH reached up and grabbed a price of 239.14 for its all-time highs. Now, after the FOMC meeting, it did push higher off the 21-day moving average, but never made it back to those all-time highs. But on Friday, rather than pulling back further than the rest of their counterparts, it held sustaining buying power and now continues to hold at 227. I think if we continue to hold in this area and let the 21-day moving average catch back up to it, I think this could be a beautiful ETF and still a continued hot sector. And last but not least, we got to look at the big boat of the stocks, your grandfather's ETF. It's the Dow Jones Industrial. Reaching that all-time high of 398, this beautiful boat of a stock can't be held down. This thing reached up very, very high on Thursday, pulling back to 394.75. It still is showing a very high extension from that 10-day moving average. We have found a lot of support on that 30-day moving average, so I would consider this ETF to be very well extended. Now, we can honestly say that it is a beautiful sight to see the overall market taking the FOMC meeting and throwing cash everywhere. Now, is this a bull trap? I wouldn't suspect so, but always keep in mind we want to use risk management in all situations of buying and or selling any equity. So please keep that in mind, and remember, if you like the content that we share, hit that like, hit that subscribe button, because we're going to bring you a stock market analysis once a week and plenty of shorts to keep you busy.